Hi everyone, this is Claire and today I'll be taking a break on project analysis and I'll be sharing with you based on some post-launch projects that you might be looking out for and based on a particular budget, what you can potentially look out from an investment point of view. I've previously launched a video based on 2.6 million budget, what you can look out for. And today I'll be covering based on 3 million budget, what you can look out for in the new market. And the reason why I've been looking at this really carefully is because since October, since the Nava Grove, Trump Park and EOK launch, there has been a lot of hype, and some people today, if you're watching this video, you may have balloted those units and may not have gotten a good queue number all the way from Ori, Alta, Park Town, Lentor Central. You may not have gotten a good queue number and you're thinking what's your next step, and I hope this will help you give some idea of what you can look out for from a post-launch perspective, because the reason why it's a bit hard to kind of focus on it is because inevitably there's a lot of hype about new launches. So Traffic comes up, you want to take a look, put in a ballot to hope for a good queue number, and then you see whether to walk away or to proceed to buy, right? Some of these people, after they buy, they realize, hey, actually I got some buyer remorse. For example, if you had gotten Ori at 2009 plus per square foot, from an investment point of view, from my opinion, it doesn't make sense if you're looking to exit in the next 3 to 5 years. But then you realize that actually there are some hidden finds in the post-launch market that I feel like you can pay some attention to. That's why I hope that looking at all these product recommendations that I'm going to roll out based on a particular budget, that will help you give some idea about if this is something that might do for you. Okay, so before that, I want to lay out some parameters. These units are exit units available at the point of filming. Maybe after this, if you ask your agent or if you ask me, units might not be available anymore, but we can always look at the next best option based on a particular budget. Of course, if a budget is slightly bigger, there are more options out there, but all this whole series that I'm going to roll out in terms of looking at product recommendations based on a particular budget are very carefully selected. So you can be assured that there are good enough in terms of backing and understanding about this product before I recommend it. Okay, so like I mentioned just now, these units are in the post-launch phase. If you work with me before, you understand that I am quite a relatively safe person. I would like you or all my clients to be able to buy something that holds the minimum risk, whether you want to let go at 3 years mark, 5 years mark, or more of a longer term. It really depends on our objective at the end of the day. So the last point that I mentioned over here, depending on the objectives, the options might differ. So best is to understand objectives before knowing that you're making the right and the best move possible. Okay, if I come back to the fourth point, I mentioned cheap does not mean good. For example, if you look at one Burnham, there was a fire sale recently. I think all the units, instead of 2009, 3000 per square foot, they were also at about 2007 plus. So average about 2007. If you look at the graph, it's going up this way, and then after that, it started to dip, and that has caused the overall CCR new launch prices to go down from 3000 per square foot all the way to 2007 as well. For you to be able to buy something for homestay, maybe to live in the city, I think that's a good buy. But if you're looking at purely investment point of view, you want to be able to exit safe and you want to have a strong pool of future demand coming in to buy your unit, then I would say, let's say for the one burner example, there are better options. Why I say cheap doesn't mean good, and this is one example in 2020 where after the circuit breaker and things started to be a bit where you can go out and like view properties and all that, the M was launched and they sold about 70% of the units there, and the units there were selling at about average 2004 per square foot. Then if you look at just on the next street in the integrated project, Midtown Modern, there was also Midtown Bay, there was also Dual Citygate. Those units for the brand new ones like Midtown Modern, they were ranged between 2004 all the way to 3005 per square foot. So from the perspective, when you look at 3005 to 2004, it's a $1,000 per square foot difference that is quite significant, and it makes the M sound very undervalued. If you look at Midtown Bay recently, just last year, the price per square foot has also gone up to 4,000. So that kind of sets a new benchmark in terms of looking at the units, the PSF in the area in District 7. Why do I say cheap doesn't mean good? It's because even though you feel that, oh, maybe you've gotten an undervalued, maybe you bought it at 2,002 per square foot, today the prices maybe have gone up a little bit, but you realize that actually for you to be able to exit, whether you want to rent or you want to sell, the competition is quite high. Newly TOP projects, normally a lot of people pay attention to them. If you look at Park Star, Penrose, they've done very well in the TOP stage, where if you want to exit at the TOP stage, maybe a best profits that you can look at when people can see the actual unit. But if you look at the M, people are a little bit struggling to sell the units and also have demand come in. So that is a downside of it. I do foresee that one Burnham will have that kind of reaction in terms of market sentiments of buying to that unit into one Burnham, even though maybe you bought it at 2007, you're trying to sell it at 2009 per square foot, it will take a while for the buyer to come in as well. So this is where I'm a bit more of advocate of RCR and OCR projects, because I know that there's future demand and there's strong demand coming coming in. But for CCR projects, not everybody kind of aspire, unless you're purely investor, you're looking at rental yield alone, then it makes sense. But if today you're looking at exiting with a decent profit, then that might not work for you. So I'll be also doing another video about understanding what's the difference between looking at capital appreciation versus rental yield. So you can look out for that video as well. I'll be deep diving a bit from an investor point of view what makes more sense for you. For that, I want to lay out based on 3 million property. Today you can choose, if you haven't bought anything yet, today you can choose a resale property versus a new property and what is the difference here. So I've laid out here in this calculator what's the difference between a new property, which is stated here BUC here, and also a resale property. This is assuming that you have a 3 million budget, you buy a 3 million, either a new property or a resale property, and for the resale property you rent it out. So in this case, for a BUC property, you buy a 3 million. Projected growth, we're looking at from a 3-year point of view, normally the new properties upon TOP they do see quite a decent profit, also depending on market conditions, but generally for TOP projects it's quite unlikely for OCR and RCR projects to be able to see a dip. Based on past trends, we would expect a 5% growth. Okay, so in this case, in terms of gross profit, you will be able to see based on 3 million about 470k gross profit. In a resale property, today we're assuming a slightly less growth based on future past trends as well. Also understanding that in a resale property today, if you buy a 3 million property in the resale market, there may be somebody who had bought much lower and then sell at 2.8. That might set the benchmark for a period of time before you can be able to see a 3.1, 3.2 transaction again. So there is a bit of volatility there for resale properties because in this 900 units development, for example, there are 900 sellers that can determine the price up and down as well. Okay, so here we are projecting a 3% growth, but in this case, you are able to rent it out at $6,000 a month. So with no downtime at all, you will get 216k in terms of rental income coming in. So gross profit actually quite similar. Okay, for BUC property, in terms of expenses over here, the interest rate that you pay, because it's on progressive payment, it's almost half of what you pay for resale property. For a BUC property, you pay no maintenance, no property tax, no renovation, nothing, no agencies that you need to pay as well. So your total cost is about 77,000. But for new properties, because you take up a 2.25 million loan straight away, your interest rate will definitely be higher because the disbursement is full 75%. You pay maintenance, you pay property tax, non-owner occupied property tax because you rent it out. You do some minor renovations for resale property, you furnish it, fittings, assuming the tenant wants that, and then plus agent commissions of 3 years, you actually see that the difference is quite significant. So in terms of other expenses, looking at 77,000 because you're just purely paying interest, bank interest, versus a resale property that you pay a little bit more. So net, if you look at this particular column over here, the difference is actually quite significant. So if you're buying purely for investment, unless the interest rate has gone down to about back to the 1 and 1.2%, then you will see the cost down here is significantly reduced. Then it might make sense for you to go for a resale property because then in terms of other expenses, it's going to be about the same. So in terms of returns on equity, right, whatever returns that you have put in versus what you take back, the net profit and the returns are slightly higher, much higher actually for new property. And that's why if you're in the market thinking about you want to be able to have some capital appreciation, you want to see some returns in investment, then I think this new choice will be best for you. So where I'm recommending today, a 3 million budget is Continuum, 3 bedrooms at 1066 square feet. So this is Continuum, it's a freehold property in the RCR region D15. 1 km from Kong Hwa, Primary is 1 km from Kelana Katong and also Head Girls School. So 3 decent good schools. This is a big plot of land, so 816 units. What I'll be recommending here is Stack 2. And there's a reason why I would recommend Stack 2 versus Stack 7, but we can zoom in on that a bit later. If you're interested to find out a bit more about why I'm selecting this stack, I can share with you separately. But these are the more of the bigger picture justifications of why this unit will be good in terms of purely from investment point of view. Okay, so the cheapest unit right now you can see is 3.038. So we're looking at 3 million, slightly above 3 million mark range. Okay, so in terms of price movement, you might be wondering, Continuum actually launched in 2023. Okay, I believe it was May. And has the price gone up since? Yes, of course, the price has gone up. For 3 bedrooms in Continuum over here, I just selected 3 bedrooms, they've gone up about 100 per square foot. Okay, so they started off about 2007 plus. They, of course, higher floor units will sell a bit more. Yes, they have increased the price a little bit. Okay, so you see this whole big trend of volumes over here is where Emerald of Katong launched. When Emerald of Katong launched, there were huge amount of interest coming in. So then there was a spillover effect of people coming into Continuum because the price and the per square foot is almost the same. So this is why I'm recommending this as well, and I'll share a bit more later. Okay, so overall right now here, 3 bedroom in recent launches today. You see the Ori at Toa Payoh. It has almost hit about 2009 per square foot for the compact 3 bedder. Elta also high-rise development in the OCR region, but Clement is really more on the educational belt. It has good attributes in terms of looking at capital appreciation, also rental yield because there are people coming in to rent that location for the schools as well. It has also hit about 2008, almost 2009 per square foot. Pine Tree Hill belongs to RCR, 1 km from Henry Park. They also, if you see that the highest per square foot for 3 bedrooms over here, have also hit about 2007 per square foot, and these are all 99-year properties. Now we look at overall 99 years, 3 bedrooms in the east side of Singapore. We have Emerald of Katong. They have also launched their units, 3 bedrooms, all the 3 bedrooms over here. The highest done about almost 2008 per square foot, so 2008 over here. The Wusu Grand, because they launched much earlier, they also is almost about 2006 per square foot. So today you're looking at 1068 square feet. Decent layout, I'll show the layout later. At 3 million mark, at the per square foot is 2008.50. So you see that it's almost comparable to a 99-year leasehold in the east side itself, in D15 itself, in the same district. And also at the same time, it's also almost comparable to the 99-year leasehold in other districts in the OCR or RCR region. And for Continuum, it's a freehold property. Okay, so this is the 1060 square feet that I recommend. Decent size kitchen. There is a storeroom over here and a bomb shelter. There's a yard, WC, functional layout. There is a 3-meter living dining area. You get a dedicated dining area, 3 bedrooms and 2 bathrooms. This is a more conventional layout. Furnitures they've given is actually quite premium. So if you've been to show flat, you realize that actually it's quite a majestic building on its own. I think this would be something like what you see at Park Esta if you've been to the development. It's a very, very welcoming feel. More importantly, we talk about a bit more pricing here. There is an upcoming launch at Bayshore, right beside Bayshore MRT. They have just received the bids and this is just sold the land at 1,388 PPR. And that would mean that the prices will start from about 2007, 2008. If you're buying Katong area, Continuum belongs to Katong Estate. Whether you bought Emerald Katong, you bought Musu Grand or Continuum at this kind of per square foot, 2004 to 2008 per square foot, you should be very happy because this one will be starting from 2007 and potentially the high floor units or sea view units will potentially hit 3,000 per square foot. If Bayshore is selling a few stations down, is selling at 3,000 per square foot, then coming in a brand new freehold property which is going to TOP in 2028, 2027 I mean, to hit 3,000 it's not impossible at all. So coming in at 2008 I feel is quite a safe buy. But what is more important looking at District 15 and looking at big freehold land, you realize that why is buying big freehold land important? You see those units that are smaller, 25 units, 40 units, they're all freehold, yes. And there is a perception of some people who may think that freehold is the best. Having the freehold status is the best because then your lease is forever, right? There's no lease decay, you don't have to worry about that. But if you realize in today's market, looking at 99 years is, in terms of budget, is more reasonable. So future demand coming in is stronger. When future demand comes in is stronger, then it will have more reason to push the price up. Okay? What I want to discuss why big freehold land is important is because there are not many big freehold land in Singapore. Okay, so some examples here. City Square Residences at Farrer Park MRT, Signature Park at Bukit Timah, also big freehold land, and then Continuum 800 plus square feet. Okay, if you look at City Square Residences, 900 over units versus just next door Cityscape and Farrer Park, both enter about the same time and exit about the same time, but you see the profit difference is significantly more. For the same period of time, if you put in the right investment, you can potentially make another 500k more over the same period of time. Seaview versus Streets at Amber. Seaview is a freehold property in D15. It consists of 500 over units, and Streets at Amber is just across the road down across the Amber side, only 28 units. But you look at the same time period that you buy, almost the same time period that you exit. Now, about 9 months difference, the profit difference is almost 800 plus K. So this is really significant. And if you look at the resale options in the market today, Amber Park is right at Amber, Tanjong Katong MRT station. The PSF has gone up actually to 3,000 over square feet. And over the 4 to 5 years time frame, 3-bedder have made about 700 over 1,000. And this one, Amber Park is a brand new TOP project, also on a big piece of land, and that's why at this point in time, even 3,000 per square foot has been accepted in the market. So why at 2,008 per square foot is still quite a safe buy for Continuum. So in this case, what we're looking at here is freehold for 99-year leasehold price, because Emerald Katong has already hit, actually there are 2 bedrooms already hit 2009 per square foot. If you look at 3 bedrooms, they've already hit 2008 plus per square foot. Okay, so in this case, you're buying a freehold for a leasehold price tag, and that means it's a relatively safer entry. Okay, a big freehold land have proved to have more value both the long run and short run. And in this case, if you talk about Amber Park, right, this new launch Continuum at 2008 per square foot is actually cheaper than the resale market. market. And because resale market has already transacted at 3,000 per square foot for a 3-bedroom, that means that the market and the area has already accepted that kind of price. So that also means that the risk is lower for you as a buyer coming in at 2,008 per square foot. 2,008 per square foot used to sound very, very expensive in the past 1.5 years or 1.5 years ago. But today we're looking at the whole landscape as a whole on all the new launches today. That's why I think it's worth looking at post-launch projects, but you need to make sure that you choose the right one. So here's my number, here's my Instagram handle. If you want, you can pause this video to also scan the QR code and reach out to me. If you're interested in looking at this particular unit, you can feel free to reach out to me. The show flat is still open. You can go and take a visit, and then I can show you exactly why that stack makes the most sense from an exit strategy point of view, and also just comparing all the difference in the stacks all together. Okay, so look out for my other videos. I'll be sharing a bit more on different budgets from all the way from $1.8 million if we're looking in the market today, all the way to $4 million in the new launch market today. I wouldn't go much of the 1+ study units because I think at that kind of budget there are more resale options that are worthwhile to look at instead of looking at 1+ study, unless you're buying this for on stay. Okay, so feel free to look out for my next video. Please like and subscribe. You can click the notification bell also to be able to get notifications on my next videos, and then I'll see you in the next one. Bye bye.